Welcome traders. Today we are diving deep into the GBP USD 4-hour chart, focusing on a detailed technical and fundamental analysis to outline a comprehensive trading plan. This analysis combines price action signals with macroeconomic factors to provide a well-rounded view of potential trade opportunities. We will examine key technical indicators, including the Ichimoku Cloud, Bollinger Bands, and MACD, to determine trend direction, support and resistance levels, and momentum shifts. Alongside this, we will assess fundamental factors such as the Bank of England's monetary policy stance, US economic data releases, and overall market sentiment. By integrating these elements, we aim to establish high-probability trade setups with defined entry and exit points. Let's begin with a breakdown of the technical analysis. The GBP-USD pair is currently trading above the Ichimoku Cloud, indicating a prevailing bullish trend. The Tenkan-sen line is above the Kijun-sen, reinforcing short-term bullish momentum. A thin but slightly bullish future cloud suggests that while the trend may continue upward, the strength of the move could be moderate. Traders should monitor whether price action sustains above the cloud, as a breakdown below could signal a potential reversal or deeper pullback. Bollinger Bands provide additional confirmation of market conditions. The price is nearing the upper Bollinger Band, signaling that the pair may be approaching an overbought level. This suggests a possible short-term retracement before any further upside movement. The middle Bollinger Band, which represents the 20-period simple moving average, is trending upward, confirming the bullish bias. However, if the price moves away from the upper band and begins to revert towards the middle band, it could indicate a consolidation phase or the start of a correction. MACD is another crucial momentum indicator. The MACD line is above the signal line, reflecting bullish momentum. However, histogram bars are flattening, which may indicate a loss of momentum. If this continues, traders should be cautious of a potential shift in trend or a pullback before the uptrend resumes. A bearish crossover between the MACD and signal line would further support the case for short-term weakness. Moving on to fundamental analysis, multiple macroeconomic factors influence GBP-USD price action. The Bank of England has maintained a cautious stance on interest rate cuts due to persistent inflation. Should upcoming inflation data remain higher than expected, the likelihood of continued monetary tightening or delay in rate cuts would support GBP strength. This would provide a bullish catalyst for GBP-USD and reinforce long trade setups. Conversely, if inflation data weakens, speculation about future rate cuts could rise, leading to GBP weakness. Traders should watch for any shifts in the Bank of England's policy language, as this will play a crucial role in shaping market expectations. On the US side, the Federal Reserve's policy outlook remains a key driver of the US dollar's strength or weakness. The Federal Reserve is expected to keep interest rates steady, but upcoming US economic data, such as inflation reports and job market figures, will be closely monitored. Strong economic data could reinforce expectations that the Federal Reserve will maintain its restrictive policy for longer, boosting the US dollar and limiting GBP-USD upside. On the other hand, weaker data may fuel speculation about potential rate cuts, which would weaken the US dollar and support GBP-USD gains. Market sentiment also plays an important role in currency movements. If risk appetite remains strong, investors may favor higher-yielding currencies like the British pound, supporting GBP-USD. However, if geopolitical tensions or economic uncertainty rise, demand for safe haven assets like the US dollar could increase, pressuring GBP-USD lower. Traders should be mindful of global risk sentiment, as it can cause sudden shifts in market direction. Now, let's discuss the trade setups based on these technical and fundamental factors. For a bullish scenario, a buy position is considered near the support zone between 1.2570 and 1.2590. This level aligns with Ichimoku Cloud support and represents a potential area for price to bounce if the bullish trend continues. The stop loss is placed at 1.2530, below the support level, to limit downside risk. The first target is set at 1.2650, where recent resistance has been observed. If bullish momentum continues, the second target at 1.2700 represents a psychological resistance level and the next significant area of interest. If price action shows signs of rejection at this level, it could indicate that selling pressure is increasing. Traders should wait for confirmation signals before entering trades. A rejection candle at resistance, a breakdown below short-term support, or weakening momentum indicators could strengthen the bearish case. Conversely, a sustained move above support, accompanied by increasing bullish momentum, would favor long positions. To summarize, GBP USD remains in a bullish trend, but resistance at higher levels could trigger a pullback. The Bank of England's monetary policy stance and upcoming inflation data will be critical in determining GBP direction. US economic data and Federal Reserve statements will impact the US dollar, influencing GBP USD price action. Market sentiment and global risk trends should also be monitored for additional clues on price movement. Traders should focus on key support and resistance levels while being prepared for both bullish and bearish scenarios. Managing risk through well-placed stop losses and defined profit targets remains essential for successful trading. Will GBP USD continue its bullish run, or are we about to see a reversal at resistance? Watch for price action confirmation near key levels before making trade decisions.